So I'm getting ready to. I have Sprout on speed dial. So I'm not there yet. I have talked to them. I'm like, just make sure I have everything set up. So when I want to just, start to liquidate some of my physical metals, it's super easy, which it is. It's just a quick phone call. I haven't sold any yet. I'm waiting for the blow off move. We're still actually in a full on rally mode, right? Like, I'm excited about higher pricing. I want to see higher pricing. But when things when you cut the air with a knife with the sentiment, and if you say one little thing negative about precious metals, you get your head sliced off. Yeah, gold is like just trying to break through this kind of euphoric little peak that we had back over here. The chart is pointing to about $5,100, $5,200 per ounce. So if we were to just forecast that forward here, you can see we've got a pretty nice move to $5,100 and about $75 percentage wise from where gold is right now. It's about 18.5% to the upside. So it's really exciting. This is a very strong chart pattern. If we zoom out on gold and kind of look at all these patterns it's made over the last little while, it rallies, it has a pause, it rallies. It's just a series of these bull flags and pauses. And we're having another pause right now. And we had a beautiful play with this breakout and this move. And we might, be looking to, I hold a lot of physical metals for longer term, but there might be another breakout trade here for about another 15% rally or so in gold, just as a short-term trade, just to pull more money out of the market, take advantage of this, and put a little more capital to work in this space. So I really like the precious metals space. I like gold the most, just simply because I find it the most accurate. The triggers, the way it moves, I find is much more comfortable. You can put more money to work. Silver's a little bit more volatile. But again, the whole precious metal complex is on fire, and there's big potential upsides in everything right here. Yeah, well, I generally, when there's big moves, big changes in sentiment, like the banks now saying and advisors saying, "Oh, get gold." Usually, we're on the last stretch of that asset. They're usually the last to kind of get on board, the last people to try and push it. A lot of advisors don't really want to do much in gold because sometimes there aren't commissions or ways to earn money in it, but you gotta just be aware. I think when everybody starts saying move into precious metals, it's usually kind of most of the move has already been done. I mean, just look at the chart of gold. If we were to just squish this down, gold has had a massive move for the last several years to the upside. Mm-hmm. And now people all of a sudden, want to get into gold now. I mean, it's great for a trade, but as a long-term investor, I think you're gonna have to weather a storm. I think we're gonna see some pretty big volatility over the next year or so in the markets. And I think gold could be back where it is now. It could actually be $1,000 lower than it is right now, looking forward 12 months. I think there's going to be that kind of volatility. But after that, I do think we're going to about 7,500, 7,400 in gold. That'll be the next upside target. But that means we have to go through a big rally and then a correction of some sort. And then, of course, it's going to go higher. So,
yeah. A key warning sign is shifting sentiment. When major banks and advisors begin promoting gold broadly, history suggests much of the move may already be behind us. Gold has risen steadily for years, yet widespread interest is arriving late. This doesn't negate further gains, but it does increase volatility risk. Markets rarely move in straight lines. Over the next year, large swings are likely, including the possibility of a deep correction. Longer term, however, the structural case for gold remains intact, especially amid persistent debt growth, geopolitical tension, and ongoing central bank diversification away from fiat currencies.
Yeah, so here I have a monthly chart of gold, and we have the first super cycle here, or one super cycle here, where gold went into a multi-year pause and everything took off during the blue box over here in early 2000s. Everybody moved into real estate and stocks, and then gold shot higher and took off. Now it looks dwarfed because we've got these high targets, but gold pulled back 34%. It sold off with the equities market and with the economy, and then we went into a multi-year rally. And so when we fast forward to the new super cycle that started in 2019, we saw gold move sideways for several years. Everybody moved into stocks and real estate. Now gold has become that shining warning sign that, hey, it's money's flowing here. I do think gold is going to push up to around 51, 5,200. And then I think we're going to see the music stop. I think we're going to see difficult economic data come out. We're going to see the stock market sell off. I think we'll see gold pull back very similar. I think we could see it pull back 25, 35%, which brings it back to around $3,400 an ounce. And then from there, I think we'll see the next target after that will be somewhere around $7,500 per ounce. That's the first target, but it could go a whole lot higher after that target, obviously. But I think we're coming into a similar price action as 2007, 2008. We're seeing money and sentiment moving into all of the assets in the precious metal space in a similar way. Now, it's different data and different news, but price always does the same thing. It goes up or it goes down. They're either people are greedy and they want to make money, or they're scared and they're selling. And so it doesn't matter if there's what the Fed's doing, if central banks are buying something, price is still going to just move up and down based around that move. And a really good example of that is if we take a look at this year, Daryl, the 2025 tariff sell-off, and this is the QQQ. The market sold off. And we avoided the crash, and then it started to bounce, and then it actually turned into a rally, and we played the upside. Well, that was a tariff-driven move, very different. We haven't had anything really like that before. Well, take a look at these two charts. The top one is the tariff one we just went through. The bottom one is COVID 2020. Very, very similar price action. The stock market does the same thing. It goes up with greed. It goes down with fear. Every time it does it is for a different reason. It's a different economic environment, but price doesn't know the difference. All it knows is people want to buy me, I'm going up. People are selling me, I'm going down. And that's what I focus on. So all the analysis I'm giving you is based on technical analysis for precious metals and cycles, historically, how things have moved, what the charts are saying now. And I take out all of the noise between central banks and conspiracies and manipulation, because there's nothing you can do about any of that. There's always going to be some of that in the market. That's part of trading. You have to dance around whatever manipulation there might be. There's no point in complaining and kicking and screaming about it. So that's how I look at these markets. And I believe there's some really good upside across the board in precious metals, but I do believe they will get hit and pull back to a point where it'll be one of these epic opportunities, very similar to, if I pull this chart up again, you'll see here, I think after we have this pullback, after this red box, we're going to go into a multi-year move where that's when you can reload the boat for the start of a new massive super cycle. That's where I think you can make really, really big money, because it's going to last for many years, and we're going to see gold go up another 100, 200, 300%. Silver will probably go ballistic as well. But right now, we're just trying to squeeze a little bit more profits out before we probably hit a roller coaster kind of ride to the downside.
Looking at gold through a supercycle lens provides clarity. Previous cycles show extended sideways phases, followed by explosive advances, then sharp corrections. The current cycle, which began around 2019, mirrors earlier patterns. Capital initially favored stocks and real estate, then gradually rotated into hard assets. Gold's recent strength may represent the late stage of this phase. If history repeats, a final surge could be followed by a meaningful drawdown, potentially 25–35%, before setting the stage for a much larger multi-year advance that could carry prices significantly higher later in the decade.
Silver's on fire today as you and I are speaking, which is December 17th. It's up almost 5%. Big move. Silver has already broken out of this pause right here. Gold is kind of stuck trying to break out, but silver's already extended. It's already moved to the upside. It's breaking out again. Our target on here was about 68 and change, which we're probably going to hit that in the next day or two. And then we can recalibrate what happens from that level. But overall, silver's on fire. And this is one of those other signs that's telling us we're a little bit later in the mature rally phase in precious metals. Is gold has moved up very nicely for many years. Now everyone is piling into miners, silver, platinum, and palladium. When we see the volumes pick up in all of those, and pretty much any stock that has the word mining in it, could be copper miners, could be base metal miners. This is usually what happens near the later edge. Later stages of a rally, they say, okay, forget the boring thing that's worked really well in the past, gold. Now I want to move into silver. I want to move into miners, things that move faster. And that's what we're seeing. And so that's why we're seeing silver break out. It's a tiny market. There's a bunch of people wanting to get in and take advantage of it, and they're all moving to the fastest moving metal or stock. And that's that's why silver is leading, I think, right now. And it's a good thing. I think silver's still going to rally. I think it could rally to 71, 72, maybe even into the $80 mark as it peaks out, probably with gold at roughly the same time. So that's what I'm looking for. Wherever silver tops out, we could grab a couple levels. So depending on how we want to go, if we take this kind of low right across this level here, and wherever silver peaks out, say it peaks out at 68, somewhere in here. Well, I think it's going to go to around 72. I think that's kind of where it could blow up and kind of shoot higher to maybe into the 80s. But let's just say 72. There's a natural pullback level around the 38% retracement to a 50% retracement. So we could see silver pull back to $50 or $43 an ounce. It obviously would be a substantial pullback. If we take a look percentage-wise, that could be, a 30, 40% pullback. And that's pretty normal for a move. I mean, a 38% retracement is very conservative. It's actually a very bullish pullback. If you pull back to that level and then it starts to build a base and starts to move higher, that is a very strong symbol. If it moves to 50% pullback, it usually is going to struggle a little bit, take a lot longer to get back up to all-time highs. And if it pulls all the way down to the 618, a lot of damage is done, because based on the Fibonacci theory, if you come down to the 618, the first measured move target ends up being right at the previous high. So you end up putting in a bit of a double top. So I do think once, we've broken through that $50 mark, now we're going to see silver have a blow off top wherever it tops, in the 70s, in the 80s over the next month or two. But then I think it's going to be stuck probably above the $50 mark. We've been stuck under the $50 mark forever. When we go back and look at historical price action, you can see here we've been, let's rescale this, we've come up to that 50 mark, close to the 50 mark a couple times. It's sold back. I think now we're going to be stuck above the 50 mark, above these previous highs, or above like the 44 level. So I think silver's hitting a new pocket of price to stay in and hold up.
Silver is now outperforming gold, a classic late cycle signal. Its smaller market size makes it more sensitive to surging demand, resulting in faster and more dramatic moves. Recent breakouts suggest silver could push into the 70s or even higher before peaking. However, silver's volatility cuts both ways. Historically, when gold corrects modestly, silver often falls much harder. Emotional trading amplifies these swings as investors chase momentum and panic during pullbacks. A controlled retracement, around 30 to 40%, would be normal and could ultimately strengthen silver's long-term structure.
I do. I mean, when you look at some of these other pullbacks, they're like 88%, depending where you want to grab them, 70%. So there's no doubt, like even in 2008, when the gold pulled back 34%, silver fell over 60%. It's just a really fast moving asset, right? It's more speculative, and in general, something that's more speculative is more volatile, which means it sparks more emotions, which means, and this is the number one problem with traders and self-directed investors, is emotions get the better of them and they chase prices. They buy high and then they panic out as it sells off. They make difficult emotional decisions. And so it creates more volatility, bigger gains, bigger losses, these volatile assets. And so I do think eventually we could see a fairly big pullback. You could potentially come back all the way down to the 27, which nobody wants to see, but that's what's happened, in the past many times. A lot of people are going to say this time is different, which every time it's different. But definitely the central banks loading up is obviously a big concern that people know something that the general public may not, although we already know everything's corrupt and broken. So physical metals is a good store of value compared to fiat currencies. But there will be a bigger percentage pullback, probably nearly twice as much of gold. And the question is just, where is the top and how does price play out over the next few months here? So I'm looking I'm getting ready to. I have Sprout on speed dial. So I'm not there yet. I have talked to them. I'm like, just make sure I have everything set up. So when I want to just, start to liquidate some of my physical metals, it's super easy, which it is. It's just a quick phone call. I haven't sold any yet. I'm waiting for the blow off move. We're still actually in a full on rally mode, right? Like I'm excited about higher pricing. I want to see higher pricing. But when things start to, when you cut the air with a knife with the sentiment, and if you say one little thing negative about precious metals, you get your head sliced off. We're not quite there yet anymore. Believe it or not, we actually had that scenario, right? We had that when gold and silver were trading right at this phase here, not that long ago. So we had gold hit our measured move target right here. And this phase right here was a crazy FOMO phase. And I was telling everybody, I'm like, listen, we're about to see some sharp pullback because everybody is going nuts right here. Everybody's piling in. It's the crowded trade. And if you say one little thing about metals, you're a dead man online, right? Mm-hmm. And so then we had that correction. And so now we're nowhere near it. The market has just cleansed itself. And now we need another big run, which is about an 19% run in gold, which is probably, who knows how high that is in silver. But we need to get back into this euphoric phase. And you and I have touched on this a few times in the past, the market participant emotions here. We got to get into a euphoric phase, and then it creates a sharp drop. And the question is, is it going to be the start of a bigger sell-off or a bull market? And so the euphoric phase, I have tools and indicators and ways to identify this. And when we see it, man, it is like, get ready, manage your positions because things turn around on a dime. Price can drop and collapse. But no, I'm not selling my silver yet. I'm still holding on to it. I'm still thinking we're going to make a lot more on it.
The rally has expanded beyond gold and silver into platinum, palladium, and mining stocks. This broad participation signals a mature bullish phase, where investors seek higher beta opportunities after steady gains in core assets. Platinum's revival, after a decade of stagnation, highlights how dormant commodities can suddenly regain attention. While this confirms strong underlying momentum, it also reinforces caution. At this stage, precious metals may be better approached as targeted trades rather than long-term accumulation. Protecting capital and managing risk becomes more important as prices approach historically significant resistance zones.
Yeah, I mean, platinum's been on fire. It has been a kind of a dead commodity for a long time, for a decade, and now it's popping and coming back to life. And that's what a lot of commodities and specific some assets do, right? They go dormant for a decade and they become like nobody's interested in it, and then out of nowhere they just shoot higher, and they become the shining star that rises from the ashes. So we're seeing platinum back up near some highs that we saw back in 2011. It's had a very strong run. I think everything in the precious metal space has had a very nice run. I think there's a little bit more to the upside still. But again, I think if you're like, depending on the style of trade and your time frame, I think it's a trade at this point. I wouldn't go buy a bunch of bars of platinum or palladium or precious metals here, to be honest. I'd do exactly what you did. If anything, I'd be going to just the ETFs, the leverage ETF or options as a trade, a very targeted trade to catch an explosive move, get in, get out, and be like, I got some more extra juice out of the metals move. So the fact that it's up here at resistance, I think it could go a little bit higher. We might see it blow off up into the 2300 mark that we saw back in 2008. But I don't follow platinum that closely. All I really want to track is money moving into all precious metals, or is it very specific? And we're seeing money move into all precious metals, which tells us we're in a bullish phase. And now that we're seeing money start to move into some of these more lucrative plays like platinum, palladium, and silver, and gold is kind of underperforming, is telling me that we're just in this late mature point that metals to me here are just a trade. They're get in, lock in some gains, protect your capital. Yeah, I think we're about to see oil have a pretty big pullback. I think there's a very critical pivot point on the chart around this, $40 per barrel. That's going way back in time. I mean, we've seen this hit many, many times before. If we zoom in on the current chart, let's just actually move to let's go to the daily chart here. Oil's definitely struggling. It has come down to a very critical short-term support level around $55 per barrel. It's been in this sweet spot. It comes down here. It finds these very strong bounces each time. Yesterday or the previous session here, we saw it come right down, test this level, kind of pierced it by a little bit, and now it's starting to rebound. I think it's going to try to find some support here. It might have a little bounce or trade sideways for the next week or so, but overall, it looks like it is going lower. When you zoom out on oil, I mean, it's just been going down for years. There's a lot of pressure and selling. There's all kinds of news going on in the space right now. I think it's a leading indicator that the economy is slowing, that there's going to be less demand. And I think we're going to see oil probably around $45 per barrel, maybe in the next month or two. I think we could see things change. I think we're going to see some news come out here soon that is going to kind of explain why oil might be going down to some regard, or like it's going to be some poor economic data. I think that could be like, oh yeah, things are definitely slowing. That's kind of my take on it. But the charts are pointing to about $45 per barrel over the next month or two, and they're on the verge of breakdown here.
Outside precious metals, oil offers insight into the broader economy. Crude prices have been trending lower for years and are now testing critical support levels. Technical indicators suggest further downside, potentially toward the mid-40s per barrel. Such weakness often reflects slowing global demand and softer economic growth. Short-term bounces are possible, but the larger trend remains pressured. If oil continues to fall, it may confirm broader market stress ahead, conditions that typically increase volatility across assets and eventually reinforce gold's role as a long-term store of value after near-term turbulence subsides.